predecessor had made an investment where the management literally just took the money and invested in property in their own name.
Wow.
So I spent the greater part of my 2 years getting back our the fund's $5 million that had gone to.
Hello, everyone, and welcome back to the VUCA Insights podcast, where we bring you insights into the world of investing, entrepreneurship, and growth mindset. Our guest today is Michael McGaughy, a Southeast Asian expert. He's been in China, he's been in Indonesia, and I'm pretty sure today we're going to dig out a lot of insights about a Westerner's lens into the world of Asian investing. So, Michael, welcome to the show.
Oh, thanks for having me. Really appreciate it.
Thank you so much for being a guest. Like, what was the 15-year-old Mike like?
Well, I was a pretty typical kid. I grew up in suburban Washington. Probably, looking back on it, kind of the greatest place in the world to grow up, I guess. My parents, very lucky place. My parents stayed together. My father had a very steady job. I never had to really worry about where my next meal was coming from. Mm-hmm. I always had a summer job and been working since I was maybe 14 in odd jobs. So really had a very good upbringing. Credit, thank you to my parents.
Great. Did they actually pique your interest into investing, or was it just by happenstance, or was there a role model in your life that got you into the world of finance?
Oh, it's very much of a happenstance. My dad's I tease him sometimes to call him a nutty professor. He has a PhD. He has a PhD in biophysics. And
okay.
He worked for the Environmental Protection Agency for most of his career. So he's Mr. Red Tape. I also tease him.
That's a good one.
Luckily, he takes it very well. But he was in charge of risk assessment at the Environmental Protection Agency in Washington. Then my mom, she was an ex-teacher, but she was mostly a stay-home mom when I was growing up.
I see. But who piqued your interest? Was there a role model? Was there a extra class that you took in high school that just opened your eyes to the world of investing?
It's basically a necessity for me because I had worked at Chase Manhattan Bank, which is it's now become JP Morgan.
Yeah.
But this is in the late 1980s after I graduated from university in New York City. And I had gone on an exchange program to Hong Kong during my junior year, during my third year in college. I went back to the States, finished up my degree, got the job at Chase Manhattan Bank in New York. And all my friends in Hong Kong were doing pretty well. I kind of missed the place. Missed my char siu bao and other good Hong Kong food and the dim sum, and spending all my time in Chinatown in New York anyhow. So after saving up $1,000 and having all my credit cards available to me, I bought a one-way ticket to Hong Kong for $400. So I had $600 and some credit. And just a long-winded way of saying, one of the few jobs that was hiring people, English speakers back then, were analyst roles. I joined a small sell-side organization called Crosby Securities, and I didn't know anything about stocks, to be honest with you. My dad, we'll talk about finance, and he just doesn't care. Doesn't really care about investments. It's just it's just not his thing, right? But you talk about something to do with science or his field, he can go down that rabbit hole pretty well. Yeah. So it's more of a necessity for me to pick up on it. So just to keep my job and to pay the rent, I joined the company, and what I found is just a fantastic field, and you can do so many things in investments, whether it's marketing, the investment side itself, or the operations, which is a huge part and very essential. So I really like what I do now, and I'm thank my lucky stars I got in at an early stage into the field.
Got it. What gave you the courage to buy that one-way ticket? The way you make it sound like you're like running a startup, and how Peter Thiel or how Reid Hoffman would say, you jump off a building and you try to build the airplane on the way down, kind of thing. So what gave you that courage, or was it just pure curiosity because you love the vibrancy of the Asian market, or what gave you that kind of push to do that actually?
It was more, I'd been to Hong Kong before. I had people I could stay. I spent my junior year abroad there, the third year in college, at the Chinese University of Hong Kong up at Sha Tin. It was a great year. Obviously changed my life, changed a lot of lives for the people on the program. I had never really been outside the U.S. before. So I love the food. I like the way people interacted. It's a lot more personable place. Made a lot of friends there. And when I found my friends were doing pretty well, the people who had stayed in Hong Kong after the program, I said, I want to go back.
I see.
Yeah, that's just kind of, I guess, just something to do when you're a little bit younger and a little more free.
And you're talking about the 1970s, 1980s, right? This was the go-go years, right?
Well, this is just before the go-go year, so I got really lucky on the timing. So I arrived back into Hong Kong in March, I think February or March of 1989.
Wow, nice. Okay, so but you started off kind of like in Indonesia, or you were more studying about the Indonesian market during the 1989. I was probably a primary school kid. Yeah, but okay, yeah. So this was during the Suharto era, and what caught your eye? I mean, the Indonesian market. I don't think it was that populous as it is today, right? Back then.
Mm-hmm. Well, it's not so much anything that caught my eye. It was more, I thought I'd be fired from my job. So I was hired as the China analyst, and this is just before the Tiananmen Square incident in Beijing in early, I think it was June 4th, 1989. So it was me and my boss. I mean, just kind of as an aside, me and the head of Crosby Securities, who's, rest in peace, Tim Beardson. We were due to get on a plane actually on June 4th, 1989 to go to Beijing.
Wow.
Talk to the officials there and give them a presentation on why they should open up stock markets in China. Because the chairman of the company, he really wanted to be one of the first foreign investors to invest in Chinese stocks. We were one of the first brokers in Thailand and one of the first foreign brokers in several markets. To make a long story short, we were stopped at the gate, not at the gate, but on the way to the airport in Hong Kong, saying, "You guys, your meal is going to be canceled. We've seen the programs on TV. On CNN was a big thing back then. CNN was the big news station back then, and we just decided to go home and watch the events full on TV."
Wow.
Yeah.
So talk about coincidence as well.
Yeah, so another roundabout story, but I thought I'd be out of a job. You don't need a China analyst if there's not much business in China for the next couple of years. We did actually go up about a month later just to see what was happening there, because a lot of clients they were invested in Hong Kong stocks and they wanted to know what was happening. But luckily in July of 1989, just about a month after that, the Indonesian stock market opened up for foreign investment. Since I was the new kid on the block and wasn't doing much, instead of firing me, thank you very much, they sent me down to Jakarta with these big, they call them portable computers, but it's like a small refrigerator. No internet or anything, and they said start writing research on Indonesian companies.
I would love to help audiences take a time travel back, because some of the audiences probably don't know days before the internet or even open call pits for trading. Yeah. So what was it like? How do you guys do research? You a sell side, 1989, you got a refrigerator size computer sitting on your desk. So how do you gather, so I'm guessing hard copies of annual reports. Then what are the resources do you actually use? Actually, I'm very curious to know now.
Well, there weren't many annual reports back then. You just get it was a very small market. There were 24 listed companies, and at that time, only 7 companies were open up for foreign investment. The biggest one, I think, was about 25% of the market was a company called Cement Jibinong. And
what do they do?
It's a cement company.
Okay.
And And now, the last time I looked, I don't even know if I think it's been acquired, or I think when I last did a report on Indonesian Business Group, it was like 0.2% or 1% of the market. So it's very small, very cheap. So it's talk about lucky timing, where I hit just at the right time to see the market really expand. By the time I think at some point there were about 400 listed companies in probably by the end of the 90s.
I see.
So huge growth in the Indonesian capital markets during that time.
Great. What were the resources? I mean, since you don't have an annual report, I'm guessing like is there like even a listing, an exchange filing or a listing or like repository?
Yeah. No, so we could get the information, but it was all hard copies. We'd have to go, a lot of Xeroxing back then, or duplicating, copying. And a lot of, we come back with a huge stack of papers back to Hong Kong and go through everything. So companies did have to file. We had to learn a lot of and a lot of times, luckily, they produce the reports with both English and in Bahasa Indonesia, the Indonesian language, on the same page. So it's pretty easy to pick up the Indonesian terms.
I see.
C is net profit, and so things like that. I forget a lot of the terms, but I got to the point where I could look at a balance sheet and the financial statements and understand the Indonesian, or at least what I needed to know pretty well.
Okay, great. And at that time, how was okay, maybe I'm jumping the gun a little bit, but how do you know the authenticity of the financial was I would say a financial statement fraud prevalent back then, or was the standard or the integrity was so high that you could trust the numbers at face value? How was it like? I mean, I'm just trying to because today, you've got scandals like Wirecard, you've got scandals like, all at huge levels. But back then, when it was so-called, for the lack of a better word, primitive, was the accounting standards like to par and to a certain standard?
They seemed okay. I was so young back then. I was just trying to figure it all out. When I got on the plane, I was like thinking, what exactly is Indonesia? What language do they speak? What exactly is a stock? I was really, really raw. So my job was just to, my goal back then was just to keep my job so I could pay my rent and get out of the small cubicle I was staying in at Hong Kong. But it's one of those things where it's a huge learning curve. So we figured it all out. I had a great boss at the time who helped me out a lot. And we kind of had I do all the legwork, where back then, the telephone system in Indonesia was really, really bad. So getting somebody on, people would give you their name card and they'd have like 4 or 5 different telephone numbers on it. Because it was so bad, they'd have to have 5 numbers just you get through once. So I spent a lot of my time in the hotel room just dialing the same 5 numbers so I could get that one guy on the phone, and inshallah, or hopefully he'd give me a meeting.
Okay.
And that was, the guy, he would teach me stuff while I did the legwork and went out and got out the annual reports, typed in the numbers into the spreadsheets, and built things up.
Wow. I mean, that's really a time travel back then. I mean, today we're so spoiled in a way. You go to a listing exchange, you have information, and then you've got investor presentation decks. How many, I did remember you saying somewhere around 24 listed companies, only 7 were open to what they call it, foreign investment. So the universe was so small. Was there a lack of quality investments back then, if you were to say? And if that was so, how do you overcome portfolio concentration, for the lack of a better word? I mean, I know you guys were more involved in sell-side work, but for the buy-side guys, portfolio managers, how did they, from your experience and your opinion, how do they overcome that lack of diversity, or for the lack of a better word?
Well, I guess they kind of looking at their kind of, I don't really know, to be honest with you, because, to give an example, I look globally right now, and if there's not, I was looking at the Ghana Stock Exchange, and there's not much to invest in there. There's just not many listed companies. So I guess kind of thinking as a fund manager would be maybe thinking back in 1989, he'd have to make the decision whether or not it made sense to go into Indonesia. And that's the biggest decision.
I see.
The second biggest decision would maybe just be buy the most liquid 2 or 3 companies that are there.
Got it. Yeah. So from there, you moved back to China. What prompted the move? Was that it's like China reopened up after the Tiananmen thing, and then that was the prompt? Was that it?
Well, one thing that happened, because we had me and my partner, when I say partner, my ex-boss had done a good job in setting up the Indonesian operation. We got some of the institutional investor wasn't doing it, but there's Asia money, and I think it's called Extel Surveys. We got some award there, recognition on those things.
Okay.
Good business in Indonesia. He eventually went back to the U.S. and I wanted to go back to Singapore. So after spending some time in moving between Hong Kong and Singapore, in the early 19th, I think it was 1992, the South Asian market started to open up for foreign investment. So I spent the next couple of years looking at Sri Lanka, Pakistan, and India, with most of that time spent in Pakistan. The reason being because Sri Lanka was just too small. I think the market cap was just tiny and nothing really traded.
I see.
And, India had this weird settlement system where things didn't actually settle. They just kept, stock just kept getting loaned out.
Wow.
So foreign institutions could really none of the operations people or the fund managers, when they looked at Indian settlement, they couldn't do anything. It was called I think it was called the Budla system. It's all gone, thankfully. But no foreigners could really do anything, even though it was the biggest market.
Wow.
So I spent most of the next 2 years looking at the Pakistan market, which did have a good settlement system.
I see. Did these countries like India and all that, I'm guessing they did mimic the settlement system from a more advanced countries, but was it because they did not mimic it properly, or they lacked what do you call it, infrastructure, for the lack of a better word? Why do you think it was so? I'm just so curious now, because I mean I'm trying to unearth all the history that you've gone through, like for investors like us who just came into the market, so what was the cause of that? And in your opinion, did it also stifle a lot of foreign investments into the country?
Well, in India, it certainly did. It wasn't until they fixed that stock loaning, the Budla system, until the foreigners started to go in there. And I think the reason for that was either taxes or the costs. And I forget exactly what it was, but there was an economic element to the reason that they developed that stock loan system.
I see.
But again, that's not a decision that I made myself. It's just that was something that I was given, that no foreigners wanted to invest there. We're a sell-side shop. We make our money from commissions. Therefore, let's look at the market where we could make some money. And that meant I spent more time in Pakistan.
I see.
Sri Lanka or India.
Great. So you went into private equities in China in the 90s. What was it like back then? How developed was, this is after the Tiananmen Square. Was the Chinese government and the economy open to the capital markets? I mean, I'm not a fervent, studious historian of China. Perhaps you can enlighten me. What was it like back then?
Mm-hmm. It was pretty basic. It was before foreign firms went public on the local markets. So there wasn't much of an exit strategy in private equity for us. There was not that exit strategy, I should say. I think it was only about 7 years later that I think 2003, maybe, I could be wrong there, but about 6 or 7 years after I left, that I think it was Sina.com. They worked out the VIE structure.
That's right.
Like in the US. That was a big thing. And ever since then, there's been a lot of overseas listings and, more listings, more foreign participation, and, no more foreign listings in Hong Kong. I'm sorry, more domestic Chinese listings in Hong Kong. So I was really before there was a lot of integration with China before China really integrated the financial markets with the rest of the world, particularly their equity markets. So it was really hard going. In retrospect, I'm not a private equity guy. So I did it for 2 years. There's a good book called I think it's called Mr. China by Tim Clissold, which is a fantastic read. I read it about 5 or 6 years after I left China, and it kind of gave me nightmares because he went all the problems he had of being a private equity investor at the same time I was there. They were much bigger scale than us. We were smaller scale, but we had situations where I walked in the predecessor. I took over the fund from somebody else. Investment where the management literally just took the money and invested in property in their own name.
Wow.
So I spent the greater part of my 2 years getting back our the fund's $5 million that had gone to the company. It was in Western Shandong province. It's not typical of all the things we invested in, but because that was our problem investment, that's where I spent all my time. And we did get the money back, and pat myself on the back for doing it. Most of the thanks actually goes to the local staff that I had there.
I see.
But it means that when you're spending time doing that, you're not actually making investments, and you're not making money for your shareholders.
Yeah, you're virtually more involved in kind of like a litigator, kind of solicitor kind of role, trying to recover money. Yeah.
It was mostly just going up the chain, and eventually found the person back in Beijing where the whole thing started that could give the approval to give us our money back.
Wow. Yeah, actually, that was what I was about to ask as well. What was the rule of law back then? It probably sounded like more of a Wild Wild West kind of, corporate governance was almost next to nothing. And how do you comfort yourself? How do you barricade or provide safeguards? Whenever you do deals, because it's like, I didn't know how. I'm very sure they don't follow a Commonwealth law rule there, but was the General Companies Act or let's say Business Act sufficient enough to protect not just the foreign investors but the local investors? Was it sufficient enough from your experience after going through that?
You have the things. The law is one thing, but there's also a way of doing things. You always have some infrastructure, right? Whether it's the specific law itself that's followed to the T, which it probably isn't, or just the customs and how things work out before. So we're certainly not the only investor, foreign or domestic, that's had a deal gone bad. I mean, that happens anywhere, right? I mean,
correct.
So what we did was we took both the legal route as well as kind of moral suasion. And kind of figured out how to do things in China at that time.
Great. Yeah, I think that's where the Guanxi is very important.
That's right.
Yeah.
One of the most important words in Chinese.
That's right. The 1990 were the go-go years, and I'm very sure it set upon your eyes. And on your blog, which I recommend all the listeners take a look at, because all the first page is all the book recommendations, and I'm in love with a few of the books that you already posted there, like Richard Lawrence's books. So 1990s go-go years for Asia before the Asian financial crisis. I think that actually impacted more of the Asian region rather than the great global financial crisis of 2008. So looking back, were there any telltale signs personally for you? I mean, most historians come from different lenses or angle, but personally for you, was there any telltale signs, or it just hit you like a ton of bricks back then?
For me, there were no telltale signs. I was pretty young back then. I hadn't gone through a market cycle before. That was my first market cycle. Looking back on it, I remember having a very smart guy. I forget which firm he was and what his name was, but I can still remember his face. And we were talking about Indonesian stocks, and the PEs were really high. Valuations was really high. And this is probably back in 2002, 2003 or so. Sorry, this would be maybe 1 or 2 years before the financial crisis.
Yeah.
And
so
everybody's
95 probably. I guess it's 95. Yeah, 95, 96. Yeah.
Exactly. And everybody's falling in love with Southeast Asia. That Malaysia is one of the biggest emerging markets in the world, huge part of the emerging market index. Indonesia is the next up and coming place. People are putting money in. And basically one guy said, this is going to end. We're getting close to a bubble. The valuations don't make sense. Quality isn't there. I had written a few reports about business groups in Indonesia, and not highlighting specifically, but giving the connection where, the business group structure in Southeast Asia makes it very easy for the controlling shareholder to siphon off cash into their private vehicles. And I mean, of course, I'm a sell side analyst. I don't want people to sell my markets, right?
Yeah, yeah.
Yeah, but I remember him clearly saying that a couple of years before they was going to go bust, and he was definitely in the minority, but he was probably proven right, or he
Yeah.
was proven right.
Wow. I mean, Richard Lawrence, I think, dedicated a few chapters in his book about this as well. I mean, the crisis really hit him bad, and his entire fund. I mean, I was a secondary student, a school student, and I saw, people actually committing suicide. I mean, those were like, yeah, yeah. I mean, I don't know the markets back then, but a lot of it was losses stemming from margins.
Mhm.
Yes, sir. Yeah, and I think that during that time, if I'm not mistaken, I think it was a T+7. So people were trading on contra basis, and I think I don't know how much leverage they were being given on the contra basis, and I had neighbors like literally making millions overnight, and then the next week or so they literally were evicted and all that kind of thing. So I couldn't understand. As a teenage boy, I couldn't really understand, but so I wanted to see from the lens of a professional, when you guys were like looking at it, how was it how was it like? So maybe more so for Indonesia. I mean, you were very familiar with the Indonesian market, and even though you were young back then, but Suharto was actually forced out after the Asian financial, or during the Asian financial crisis, because his family had a lot of business interests, and I'm pretty sure. And I was watching a documentary about the Salim Group, which was very, very interesting for me.
Mhm.
And as an investor, once you see a political crisis happens like that versus that of a financial crisis like the Asian financial crisis, how does it impact your investment thesis? I mean, you were writing reports based on certain government policies that were favorable to the companies you were writing them on. But now with this happening, what happens? What changes?
Mhm. Well, first off, it's great that you're mentioning the Salim Group video. I think I've seen that also.
Yeah.
And also, there's a fantastic book on the Salim Group by basically my mentor, a guy named Richard Borsuk, who's an ex-Asian Wall Street journalist. Just a fantastic book.
Yeah.
I hope your listeners get a hold of that.
I'll definitely put a lot of these book links in the show notes below, actually.
Oh, please do. Yeah, just a fantastic book.
Yeah.
And the markets in Indonesia, you had the first hit was because the Thai baht got hit in July of 1997, and I think Suharto left the scene in March, about 9 months later, and I think it was March or sometime in the spring of '98, and that's when the market really hit a bottom. The uncertainty really at its peak when you had the financial crisis morph into a political crisis.
Yeah.
Because Suharto had been in power for, I'm going to say, 30 years, maybe.
Yeah.
At that point, maybe
correct. 1967 till 1998. Yeah.
Yeah, just about 30 years.
Yeah.
And you had a lot of, it's a very young country, so you had a whole generation of people who didn't know anything else except Suharto.
Yeah.
So it was a lot of uncertainty at the time, but what you had, and you had a lot of, you went through maybe 3 or 4 years of a lot of uncertainty, also a lot of changes in the government. I think you had 4 maybe presidents in a very short period of time. I'm going to say 3 or 4 years before SBY came in, and he was there for a good full 6 years, I think, initially. But it was during that time you could see a lot of the reforms take place. So you had a lot more power given to the regions, to the provinces, which makes a lot of sense. Because now the provinces could control their own budgets and manage things better. What else? You had just a lot of reforms take place. So if you actually follow what was happening on the ground, it was looking pretty good.
Yeah.
And also, it's interesting. I had our data provider do a back test of all the stocks in Indonesia. There were 100 baggers over the last, going back to when their database started about 35 years ago. And you had a lot of those. I think you had about 5,400 baggers.
Wow.
And then 35% or basically almost 8% of the stock market, 8% of the stocks that were listed in the spring of 1998 were 100 baggers.
Oh my God.
And I should go back and get the stocks, the number that were 9 baggers or 90 baggers or 70 baggers. And that doesn't include dividends or dividends being reinvested.
Invested. Oh my God.
So that was just a phenomenal time to invest if you could stomach the pain.
Wow. So I'm guessing on the list would be companies like Bintang Beer.
Well, even the biggest company in India, one of the biggest, called Astra International.
Okay.
That was a 200 bagger. And I have I'll send you a blog that I wrote on that.
Okay.
Where I compared Astra International to another Indonesian group that I didn't like so much. And
Okay.
it's just phenomenal, the difference between a quality and a non-quality group. And a lot of that, looking back as to what was good and what was bad during that period and what worked and what didn't work, really influenced my investment style and the fund that I set up about 5 years ago.
Fantastic. Yeah. I mean, I wish there were more literature, especially like what you just narrated about the Asian markets, which, I think a lot of it is obscure. A lot of people who, pardon me for saying this, but a lot of people who want to come into the industry today, they're just very influenced by Western literature because a lot of it has been written, people take time to write it. And I find for lack of literatures that talk about the Asian markets, apart from you, Richard Lawrence, Claire Barnes, not many is being written, and I wish more people will write about the Asian markets, like what you said. So, maybe an idea for another book for you, Michael.
Yeah, definitely. I should. Yeah. There's probably a lot written about it. I don't think there's much written in English, and a lot of stuff doesn't get translated.
Yeah. But you'd be surprised. I was trying to look for literature in Malaysia about the Asian financial crisis. Not many Malaysians write about it. Good ones.
Okay.
To be honest. Yeah. The one that I found that was the most interesting, that had the most data set for me, was written by someone in the University of Michigan. Actually, I couldn't even. Yeah, and it was like a very thorough analysis. It gave a lot of data sets to actually show the telltale signs leading towards that, entire market value. Market cap to GDP kind of ratios and all that comparisons. Yeah. So
I'd love to get a copy of that, or maybe.
Yeah, sure. I'll send it across to you. No problem. Right. Yeah. I have it in my archive somewhere. I just have to dig it out. Right.
Okay.
So now, comparing the Asian markets to the developed markets, I know you've always been focused within Southeast Asia and Asia. What are the similarities that you see and what are the differences? Obviously, US markets have been much more mature, but even during their go-go years, probably the 1960s to 1970s, comparing that to the Asian markets, what were the nuances in similarities and differences that you see actually as an observer?
Well, for me, I guess if I can answer that in two parts. Number one, the fund I manage now isn't focused specifically on Asia. We're a global value fund. And what I've done is use the experience, particularly my experience in Indonesia, what I just told you about finding the best time to buy Indonesia was during the crisis.
Yes.
My fund that I manage now, and I was doing this for about 5 years before I started the fund, is to invest when and where there's a financial crisis. So, I went down to Greece in 2012, and because I remember the reporting was pretty similar to what we had during the Asian financial crisis, and did well there. Made some money in Russia in 2014 when the ruble was devalued. Made a little bit of money in Kazakhstan because that Kazakh tenge was devalued. And it's the fund I have now, that I manage now, is we invest when and where there's a financial crisis.
I see.
What I do is for quality companies in levels of what I consider kind of generational lows or generational periods of peak uncertainty.
And your investing style is very centered around what I remember around what the Chandler brothers like to do. They'll go into Richard Chandler and what's these brothers? Yeah. Do you see that similarity, or you feel that that's something that most investors don't capitalize on actually? Run when there's a fire, right? But you're actually heading towards the fire, right?
But they're a lot more concentrated than I am.
Okay.
So I tend to, I think they didn't buy that and sell that many things, but they went in very big into something that I like to call double negatives. And I look for this today, and these are places where the country's out of favor.
Yes.
Like I think they went to Brazil telcos in 98, maybe.
Yeah.
Hong Kong property when it had fallen 70%.
Correct.
So they go in big, and so at that point, I think telcos were out of favor around the world, as well as Brazil was out of favor. So right now, one of my favorite investments is in Egypt. It's an automobile manufacturer that also has a huge financial industry. Huge investments in the non-bank financial industry. And so, automobiles are out of favor now, except for the Teslas and the BYDs, these electronic vehicles. They have the Chery business in Egypt. They have the Hyundai dealerships. So they're a lot like Astra International in the early days with Astra. In fact, they use Astra as a role model.
I see.
Business. So that's kind of what I call a double negative. Egypt's out of favor, or the automobile manufacturing. If you're not manufacturing EVs, the valuations are very inexpensive, and because of their name, they get lumped into that, even though that's not their biggest business anymore.
Understand.
But that's kind of talking about the Chandler brothers. They were very concentrated in what I would call these double negatives, and that's something that I try to look for when I look for the crisis.
Yeah,
or invest during a crisis.
Yeah, they were making huge swings, huge. I mean, Japanese banks when they were really like about to go bust, things like that. Yeah. Is it easy? I mean, in the past versus now, was it easy to go into foreign markets like this? I mean, like I have friends who are trying to buy or getting direct access into the Vietnamese markets, and even then it was like difficult to find a broker that actually were willing to broker. Is that the same? I mean, like thinking about Uzbekistan, right? Is it easier today to get into markets like this? I mean, you can find an international broker that actually brokers there, and then compare that to 10 years ago. Was it very difficult back then?
Yeah, I think it's definitely a lot easier now. We're on the IB Interactive Brokers platform, and they have a lot of international markets, probably much more there than they had 15, 20 years ago. So it's a lot easier now. It's still difficult in places like Uzbekistan because there are still no international brokers there. So I had to go there, and I mean, for me, that's half the fun. I mean, I remember going down to Jakarta, and Uzbekistan is still much more ahead than Jakarta was in '89 than Tashkent is now.
Okay.
Or Tashkent is a lot more ahead of now than Jakarta was in 1989.
I see.
Had the stock market for a long time. You can do, I trade the stocks direct market access on my screen. Anybody can go set up an account there. The brokers they want the business. They want
a business. No, interesting. It's not so much rather red like what you said about your dad, Mr. Red Tape, right? So it's not that much red tape for these guys.
There's still a lot of compliance. If there's anything that I do bad, one downside in the last 15, 20 years has just been the amount of red tape, the amount of compliance that I have to do, or everybody has to do these days. Make sure we get what they call certified true copies of my signature, and make sure my investors have, when they get onboarded, they have to have a recent copy of their address or address proof, utility bill. So just getting that takes much more time than I thought it would.
Understood. Since your fund is global and you've tapped on your experience of emerging markets during the go-go years, and looking at probably their Western-led of counterparts or different markets, I mean, how do founder-led companies in Asia versus other markets? How do they look at shareholder value creation? Do they look at it from the same lens generally, or is that huge variety? If you break it down geographically, the way they look at shareholder value creation?
I don't know if it's so much geographically. When we're recording this, about a week or two after the Silicon Valley Bank situation.
That's right.
I was just reading. I don't know if it's true, but I think it's true because they posted the copy of the official SFC filings on Twitter.
Yeah.
That a lot of the executives were selling shares just 3 or 4 weeks before the bank collapsed, and I just read that there were a lot of inter-party, what would they call, the bank equivalent of related party transactions. So a lot of loans were given to the executives, or loans were given to companies that the executives had interest in. I don't know if it's true or not, but to me, that's exactly like a lot of the emerging markets, or what we see in Southeast Asia. I used to say the big difference between U.S. and non-U.S. places is the degree to which the controlling shareholder can siphon out cash. So one of my kind of labor of love, I still like doing it, is to map out the controlling shareholders ecosystem. So not just the listed company, but also figure out what else he owns besides the listed company. Because if he just owns 50% of this entity, or 51% a controlling stake here, he can siphon off cash to the entity where he owns 100%. And then maybe if he wants that company that's already listed to have a rights issue in the next couple of years, he can manage earnings or the cash flow back into the listed company, kind of do a long-term pump and dump to raise the value of that company, so he can have a high rights issue, and then reverse the whole process again. But there's a lot of ways, to make a long story short, but if you have control of these entities, you can get cash out of it.
Understood. It's like squeezing public money, bringing it back to your own pocket, then figure out a way to pump up value, and then squeeze more money, and then it's just like a very vicious cycle. I mean, I've been a victim of one of those companies before when I first came into the investing world, and it's like they were raising public money to bid on projects, and then eventually the project. I don't think at that time a related party transaction was what they call it, recognized and required the amount of disclosure they have today. But that was how it did it. I mean, took public money, bid for a project, and then the project was awarded to a subsidiary which was not even part of the listed co.
Yeah.
So it's like
Then you hear of companies. There's a group I know in Hong Kong where they have like 9 divisions, one of which has a publicly listed company, and that's one of their smallest divisions. And the only reason they keep it public is because they went public a long time ago, and they just want to keep all the staff and they don't want to change it. But they're really focusing their attention elsewhere within the group. So maybe they're not taking money from it, but the attention of the management of the group, the guys who really make the decisions on where to spend their time and energy, is elsewhere. It's not with the public company.
Correct.
To make a long story short, what I really look for is a good alignment of minority and majority shareholder interest.
If the company structure is so convoluted, Mike, how do you okay, I give you an example. And in Malaysia, there's probably a few family-owned conglomerates. And I don't want to name names because it may be nuanced otherwise, but it's so convoluted they have probably like 200 to 300 subsidiaries within the group. Do you is that straight away an orange flag? It says, oh no, it's just too convoluted and you're just gonna stay away. Associate here, subsidiary here, JV here, and oh my God, once you try to figure out the money flow, you're completely lost. Is that already a sign of an orange flag for you?
It depends. I mean, if the holding company is listed, then say that the holding company is listed, the family has a lot of interest in the holding company, then you have all these, what you said, 200, 300 subsidiaries and associates. They can transfer price a lot back and through here. But if your interest, the family's real interest is in the holding company, then you seem like you probably have pretty good aligned interest. So the Astra International was like that. The Soria Jaya family, and then the Jardine groups took over Astra. They have a lot of, I think they only had like 100 or 200 companies even back in the late 1980s, early 1990s. But it seemed like you had good aligned interests. And the Soria Jaya had a very good reputation. So you had good people. I look at 3 things. I look at people, structure, and value. Where I concentrate my time. And value, when you invest in a crisis, almost everything is cheap. So I was in Sri Lanka in the middle of last year during they're having a big financial crisis, but if you look at their valuation, everything's cheap. So in that situation, you can really spend time looking at the 2 other legs of the stool. People, who's the family or who's the people behind the company. Have they treated minority shareholders well in the past, or have they treated them badly.
Mm.
And then thirdly, what's the structure of their ecosystem? What's the scope for them to take cash out of the company, out of the listed company? And if there's not much scope from that, and you feel you have a good aligned interest, that would be cause to invest.
Great. So again, people, structure, and what's the last one? Sorry.
People, structure, and value.
Value. Yeah. So I think great insights, Mike, on how do you look at things, and it transcends geographical boundaries as well, right? Yeah.
Going back to having a great upbringing, I was always taught to treat everybody the same, right? And so you find the same kind of greed and fear type mindset, thinking fast and thinking slow. That's universal. The ways we express those feelings are different, but that's a pretty universal. You were talking about people buying on margin, being rich one day and then panicking the next day. That happens all over the place.
Yeah, exactly. This greed and fear knows no bounds.
Yeah. There's some great books on behavioral finance that'll show, the same place where you feel physical pain is the same place you feel pain when you're losing money.
Yeah.
So when people say they feel really bad losing money, they really feel bad. I mean, it's the physical pain. It's a feeling of physical pain.
That's right. Great. In your investment research process, you've given us a little bit of color when you were starting out in Indonesia, lack of, there's no such thing as internet connection and all that kind of thing. How would you begin? You've given us a glimpse of you go to those double negative areas, and usually those double negatives do not have somewhat of an infrastructure for you to gather information easily, right? So how do you begin an investment research process, for these kind of markets, and what are the things that you look for first? I mean, if you were to, let's just say, Côte d'Ivoire. I'm just throwing out a country, right? Côte d'Ivoire. You've gotten Ivory Coast.
Mm-hmm.
You've gotten an idea. Someone just threw you an idea. So how would you take us through? Maybe you take us through your process. If you were given an idea in Ivory Coast, where will you start? Where do you know you need to travel? Hit boots on the ground, and how do you end up making a decision?
Okay. Well, I guess I'll use Sri Lanka as an example.
Okay.
I was just there in June. They're having a crisis. In a crisis, the first question, my macro overlay is pretty simple. Is the country in a crisis, a financial crisis? If it is, then consider it. If it's not in a financial crisis, then don't worry about it. So that's a pretty simple macro overlay for me. So I don't really look at interest rates, and I'll just pay attention to them. But I'm really looking for once in a generational crisis. I think that's the best time to invest. And what I do to pick stocks is the same research I was doing when I did the group reports when I was on the sell side. So I used to write these pretty long reports on Malaysian business groups or Indonesian business groups or business groups in Southeast Asia. And I actually did one in China. And they would basically go through the key people in the group, and also the key companies, and just look at the structure. So I'd map out, the structure from the controlling shareholder standpoint, including the listed and unlisted companies. And so I basically do the same thing. And the first part of that process is to list all the companies by their value, by biggest to smallest, by market cap, and start mapping who the ultimate controlling shareholder of that company. Is it one family? Is it a subsidiary of a foreign multinational? Is it does it have a diversified shareholding base where there's no one or two, and there's no one single entity that controls the company? So it almost becomes and a lot of the markets that I look at are like that. Even in Greece, a large number of the company, I think you had like 7 or 8 big families that held stock. That had 7 or 8 big families that controlled a big proportion of the market cap in Greece. Subsidiaries were foreign multinationals, and you had what I would call a handful of companies where you didn't have one single controlling shareholders. You had a handful of companies where you had one family, and the only business they had was that one business, the listed company. So there were some of the families I didn't like, so I could just get rid of 3 or 4 stocks that they held on the market at a time.
Understood. So from there on, it seems like you were looking more for the quality, controlling stakeholder and probably the quality, but usually for a bottoms up, kind of research, you look at the industry and then you look at the value chain, unit economics, right? I'm guessing, because I didn't hear you mention it, it's probably at the end of the process. Would that be fair for me to say?
That's right.
More.
Yeah. Usually that information is once you get down to once you work out who owns what, and the reputation of the people behind the companies, are they good or bad? And that's pretty well known by a lot of people. In most of the markets that we're in, people like Steve Jobs or Bill Gates, they're really well known. Same for our markets. I forget who the big guys in Malaysia.
The Teh Hong Piaos, the Kwek Lang Chans.
Exactly.
Yeah.
The Bok family.
Yes.
They're pretty well known. They're written up in both the tabloids as well as the business journals.
That's right.
And you can get a sense of what their reputation's like. Both in terms of their lifestyle as well as in terms of the brokers and the investment bankers can give you examples typically of ways that they've helped or not helped minority shareholders.
Understood. So yeah, usually, I mean, there are many routes to Rome, and it's pretty interesting that you come from that controlling shareholder kind of thing. Here's my next question, related to the same item. How do you verify, like, for example, alignment of majority to minority shareholder interests? I could think of one example, which is dividend distribution, because that's the easiest way to, like, if the payout ratios are aligned or are they siphoning off money. Do you have other characteristics that you look at to to validate minority and majority shareholder alignment?
A lot of it is looking at the structure. I wrote a blog about structure, which we can also put in your show notes. What it looks at is, say, if somebody owns a candy company that makes, gum or chocolate candies, and they also own the 7-Eleven type stores, and one's in the private hands and one's in the public companies, it's very easy for them to overcharge or undercharge one or the other, so you can transfer profits to one of the other. And maybe they don't do it at all. But say if things really get bad in a crisis, they may be forced to keep their business afloat, to keep both businesses afloat. They may do something that would not be in the benefit of minority shareholders just to keep things going.
Understood.
So my general feeling, if there's a scope for what I call adverse related party transactions, it's quite possible they'll be used at some point.
Got it. How long does it normally take for you? Let's just say, like, for Sri Lanka, you said you were there in June. Prior to that visit, where would be your comfort level to say, okay, now it's worth my time to actually do boots on the ground kind of validation work? So what's the pre-work done in terms of timeline? A month, 2 months? Do you have a team of people helping you crunch the data kind of thing?
It's mostly just me right now.
Okay.
And for me, it's a labor of love. So I can, so when I mapped all the Sri Lankan companies, I got out to about maybe half or 50% or maybe 75% of the listed companies there within about a month.
Okay.
I've been doing it for a long time. So I know what to look out for in the spreadsheet. I mean, not spreadsheet, but the annual reports and the filings and things. And it's a lot easier now than with the internet and with the data providers information.
Yeah.
So I try to do it pretty quickly because your time lag between it can be so, like, the Sri Lankan market is up about 30% so far this year. Because I think it's one of the best performing markets so far. But I started looking at it back in May, I think. I started to make investments back in April or May. Sorry, no, I started looking at it back in April and started making investments in May and June. So that's only, they had the crisis maybe started occurring in February or March last year.
Yeah.
So that's about 9 months until stocks started to move. So you don't want to wait too long. I mean, it could crash again, right?
Yeah.
When I was in Sri Lanka, I was
time is
kind
the essence, actually. That's what you're trying to say, right? In a way.
That's right. Yeah.
Yeah.
And it could still crash again. If you have a political problem like Indonesia experienced, which is a real possibility in Sri Lanka, people are really hurting there.
Yeah.
I mean, the price of eggs and chickens go up, 5 or 6 times in a very short period of time.
That's crazy.
Yeah.
Yeah, it's crazy. Therefore, if you've done that pre-work, controlling shareholders and all that, I'm guessing like the unit economics and all that play a slightly smaller weightage in your investment decision, because I'm guessing like you go into a double negative, but you kind of buy into a broad base, market leaders within the exchange, rather than like a very concentrated into like how the Chandler brothers did it. I think they went into Mitsui or something, so it was very, very concentrated. Is that the strategy that you employ, a more broad base, like because you are looking more at the controlling shareholders, those families you don't like, you eliminate, but then you get into those where you probably have like top 20% of great companies within a certain exchange? Is that how it works?
Typically, the companies that are already listed on the exchange have good characteristics. Unlike the U.S., most emerging market exchanges, they have a minimum profitability level. You have to be profitable for 2 or 3 years before going public. You have to be of a certain size to go to the main board. So listing requirements tend to be harder than it is for more freewheeling markets like the U.S. and say the AIM market in London. So that's one filter. What else was I going to say? And yeah, that's another thing. Of course, I'll ask that. What's your market share? But I like asking about their incentive structure. Their margins and their past margins. How are their margins holding up during the crisis? How were they doing in the crisis? Have they been through the crisis before? A big part of the business in a lot of markets is just the foreign exchange, because that keeps a lot of people away. What do you do with your currency? What's your loan levels like? What is the possibility of the company going bankrupt?
Yeah. Great. Now, how do you mitigate risk? I mean, in general, a lot of these companies, you may have done your research to the T, but are there ways that besides like, in a way, desktop kind of risk mitigation, looking at the balance sheet and all that, what do you find are good risk mitigation measures? Is it like meeting with management, like validating what has been written about them eye to eye? Is that a prerequisite of you investing into the company?
I'd like to talk to them at least. But a lot of it's more fact finding, because a lot of the stuff that I ask questions about is just simply like, who owns the shares? What's their background? What's the family like? And a lot of times the IR person, even the family themselves, are very open about that. What was I going to say? So in terms of risk mitigation, a lot of it is, I'm an eternal optimist, right? So, I can't invest in a normal market because, I'll be the guy who buys to the top, right? So buying after there's a crisis is a way for me to use my eternal optimism as a way. So I guess in terms of risk mitigation, is just waiting for the crisis to happen. And
the double negative.
Yeah. So that gives you a great playing field, because things are just so cheap in places like Indonesia, Sri Lanka. Even with a 30% rise, things are still really, really inexpensive there. What else do we know? Nigeria is looking really cheap. You have problems with getting your money out.
What about Hong Kong? Is Hong Kong considered cheap?
Really cheap, very inexpensive right now. It's not quite at my crisis levels, but it's pretty close.
It's really close. There's so much money flight risk. Everyone's setting up shop in Singapore instead of Hong Kong. Even like we hear news of value partners like setting up bigger in Singapore comparatively to Hong Kong after the protests, after COVID, after all these restrictions, right? So maybe related to that, besides mitigating this kind of risk, is language an impediment of a barrier? Earlier you alluded to Indonesian listed companies having a bilingual report, but in countries like Sri Lanka, I think English is practiced. Probably, have you invested in countries where English wasn't the reporting language? Yeah.
So, it's a lot easier now, with Google Translate, except for Chinese and Turkish. Turkish doesn't work very well, but for most languages, for Arabic, it works surprisingly well. Russian and Spanish, because we're in Uzbekistan, Argentina, Egypt, and the Google Translate tends to work pretty well for all three of those places. And having said that, Uzbekistan, I wish they had more English information. We have a great reform program going there. They're rapidly privatizing their companies, and nobody's looking at it. And I think the reason is because everything's in Russian.
Yeah, you better put in your positions, because maybe after the show people will be looking at it. I'm just kidding.
I hope they do.
Yeah. So I do want to trigger just a little bit of a reverse gear back into China, because one of my hesitations to invest there, actually a few of my hesitations to invest there, is one is because you see a lot of very centralized kind of top-down decision making, and has impacted even online tuition, common prosperity and all that kind of thing. How would an investor mitigate this kind of risk? Do you think that the government draconian measures will actually scare away too many investors from your point of view?
Government policy and changes are part and parcel of every market around the world. Whether it be China or India, even Uzbekistan. I just told Uzbekistan is probably the fastest performing country in the world. So you have these, and it's privatizing very quickly. So you have these government policy measures that are, in my view, are helping both the economy and the hopefully so far value, knock on wood, equity values too. I was in Tashkent in November, and I hadn't been there for 3.5 years because of COVID, and the place had just almost completely changed.
Wow.
I got off the plane, and within 10 minutes, you realize this. The first thing that came to my mind is this is now bright lights, big city. Tashkent before was very, very sleek, but before, there were no traffic jams. There's almost no neon or advertising. Now the streets are filled with neon and these billboards, LED or LCD billboards. Shopping malls are packed.
Wow.
You have locals are complaining about traffic jams, which aren't that bad actually. Before in Tashkent.
Yeah.
I think electricity usage is like 40% in 5 years or something. Wow. In Tashkent. So it really is kind of becoming boom times there, which is good. They need that. People are more aggressive actually, in a good sort of way.
Yeah, you're tempting me to visit there, Mike.
I'm sure you're asking about policy. I think you have to be cognizant of that in any place. So in Sri Lanka, one reason there, a lot of emerging markets now are very cheap. Kenya had a big meltdown. Ghana, I think they're either defaulted or about to default on their debt. They're in a crisis. Zambia just had defaulted on their debt, I think 2 years ago. I missed that one. Emerging markets or frontier markets are very, very cheap. And one thing I really like about Sri Lanka, and probably why we'll stay there instead of looking for new venues, is just because they're having a big reform program.
Got it.
And in the past, the government they've done a lot of reforms in the past. Yeah. In Sri Lanka, and it sounds like we're going to do some more.
Yeah. So I mean, like, will it? I'm guessing the Rajapaksa family will be, I would say, for the lack of a better word, having their wings a little bit more clipped, and with the reform that they're having. I mean, I'm not followed up, but is that what you're seeing right now? Because I mean, they were a pretty dominant political force, ruling family, and now with this crisis that has happened, the reforms may be positive in a way where their power is a little bit more clipped. Is that how you're seeing it right now?
It sounds like they're taking a lot of the IMF suggestions to heart. In fact, I think when I was there in June or just before, just after, you had protests that were basically, the protests were in line with a lot of the reforms that the IMF suggested. typically when the IMF comes to town, they impose these measures that the locals don't want, so they're anti-IMF protest, where they weren't. So the protests weren't for the IMF policies specifically, but they were more or less in line with some of them. I.e., the state-owned companies were too, they weren't run efficiently. There are too many people employed. There were a lot of newspaper, it's a free press there, as far as I could tell, and there were a lot of articles and stories about how inefficient and how bloated the state-owned enterprises were, and a lot of exposés on that. And so a lot of locals were, they didn't like that at all. They don't want to see their tax dollars are waste, and they're people who should be helping the government or helping the public actually just not doing anything. There's just stories about taxi drivers going to work twice a day, once in the morning to check in and once in the evening to check out, but then otherwise driving a tuk-tuk or a taxi to make money, even though they have a government job.
Oh my God.
So when you hear that, everybody knows it's wrong. You can't blame the guy for doing it if he can get away with it.
Yeah, exactly.
But I think even though they knew what they were doing, they probably knew it was only for a limited time that they could get away with it.
Understood. Yeah, I think I was referring more towards China, because now, because of this clampdown and all that, obviously we're not going to discuss politics, but government policies that kind of hinder or give a rise to fear. Like, for example, I've always been intrigued by the VIE structure, because technically you don't own any equity.
That's right.
Right, to the company. So is that a big risk for foreign investors like us? Because when you're buying into an Alibaba listed elsewhere, it's a VIE structure. Technically, you don't own equity. But will the Chinese government even go, for the lack of a better, make good? The Swiss government has just displayed to us, it says 81 bonds just go bust, right? But do you think, from your investing experience, and obviously this is it's your view set, will China in a way allow VIE structures to collapse and leave us hanging as investors, foreign investors?
Mm-hmm. I kind of be surprised. I've looked at I've read the VIE structure in maybe even Sina.com's prospectus or another company's prospectus, and if you look at the structure itself, you realize there's not a lot to protect the minority investor in that
Correct.
situation. But it's one of those things that is just so commonly used that I'd be surprised if they, you remember we were talking earlier about that infrastructure that's there, whether it's on the legal, you have the legal side and then the non-legal side. That non-legal infrastructure has been there for a long time, and I'd be surprised if there's probably a lot of people that just don't want to change that.
Got you.
It's kind of hard for me to answer that question, because I'm so focused on the countries we're in, Turkey, Egypt, Uzbekistan, that I haven't really spent a whole lot of time looking at mainland China recently.
Yeah, and I'm pretty sure in the countries that you're in, like even Uzbekistan and all that, they may not even have a structure where you own equity as well, but it's probably called a different name or whatever. And I guess, like what you've rightly pointed out, there's this hard structure and there's this soft structure, and every time something is being done by a government, it may trigger a fear or backlash of money coming in, foreign direct investment coming in. And I doubt any government of the day with a little bit of a capitalist kind of thinking would want that to happen, because it just sends a crisis of confidence down the shareholders or the investors outside kind of feel. That's what I gather from your opinion as well. Yeah.
It's also just, same thing that's happening with the banks now. You have one bank go down and everybody thinks, it's what do you trust, right? At some point, you're giving my investors who come into my fund, they're trusting me with their money. They're trusting me to do the right thing. And
correct.
You need that level of trust.
Correct.
And I'd be surprised if people really want that level of trust to change.
Yeah, exactly. That's right.
But I really, you don't know at the end of the day what's going to happen.
Yeah, that's right. So, trivia question. what was probably your proudest or happiest bull case? That means like it went wildly positive in your favor.
Mhm.
And probably on the extreme end, what was the case that you were just completely blindsided and you took it as a lesson learned? Probably share with us those two extremes.
Sure. So I guess I'm talking my own book right now. Our biggest investment is got to be our biggest investment. It's about 13% of the fund now. It's the Uzbek Commodity Exchange.
Okay.
And that's done really well, and it's exceeded our expectations. We're getting, we put about $50,000 into it 5 years ago, and now we're going to get, we should get about $40,000 in dividends this year.
Wow.
The company's trading at about 7-8 times this year's PE, 10% yield. And it's growing. It grew about 40% top line last year.
Wow.
Spinning off lots of cash. And so it's a really interesting company in that, they're trading most of the stuff spot. So at the end of last year, the end of 2001, they passed legislation to allow futures and derivatives trading on the exchange. And so they are just starting to introduce that now. They're introducing a logistics platform on the exchange.
Wow.
The government, about a third of their business is the government. It's really interesting. It should be a great Harvard business case study as well. The government if you're a government or state-owned enterprise, to buy certain commodities, you have to buy through the exchange.
Wow.
We did that in an open bidding process. And so the exchange handles that open bidding process on behalf of the government companies, both buying and selling. And you could see that we're invested in a cement company there. So you could see as the cement company is selling more goods through this open bidding process on the exchange, and the exchange is getting some money for that, but also the margins at the cement company went up because there was a lot less gray market dealings by the salespeople. And so it's just a net benefit. It's a great way to decrease under the table, what's it called, T-money dealings, decreasing corruption, making it more open, more transparent. And we could see that in both our companies. So we benefited two ways from that. So it's just a great example of using the market as a way to make things more transparent and more open in a developing economy. Again, I think it'd make a great Harvard business case study, or another case study from if you have any, for maybe one of your students or something.
It will be definitely high on my list to read up on it right now. So
that's about a 7 or 8 bagger for us.
Wow, fantastic! Congratulations.
Yeah.
So what's at the other extreme end, Michael?
Yeah, well, it's the other part of the Soviet Union. Uzbekistan is in the east, and then ex-Soviet Union. Ukraine, I went there in 2015, I think, 2014, and I happened to be there right during the Maidan situation, where they had this huge protest that was turned violent in the middle of the city, in the middle of Kiev. And that staying by when there's blood in the streets kept going through my head. I had already done really well in Greece. I told my friends that I was going to go to Ukraine. It's the cheapest market in the world, and I really lost my shirt there. So the biggest hit I took was on the currency, and then most recently the broker I had wasn't very good, so I got hit twice on that one. But I'm still in contact, and he's trying to help me out and recover some things. And this is way before the Russia-Ukraine war. Yeah. So. But I had a slide for it in my pitch deck for a little while about things that I've learned, just hubris, bragging about how well I had done and how well I'm going to do it in Ukraine, and looking more. And actually, I think a lot of people ask me what I would do differently now than I would do before, what I've learned. And what I really learned from that is don't just look at value, really spend a lot more time looking at the quality of the company. In an illiquid growing market, or in an illiquid market like Ukraine.
Great. Yeah, which is a very good segue to probably one of the last questions, is that I'm very sure you accumulated tons and tons of methodologies. I wouldn't like to use the word shortcuts, because shortcuts is kind of give it a little bit of a demeaning value to it, but probably what are your like quick guides, rule of thumbs that you wish you knew earlier? You wish that, you know, you wouldn't have to go through the merry-go-round to achieve the same kind of understanding or insights that you would want to share with younger investors that you are probably, some of these guys are probably going through their CFA exams, but I don't know if you read the latest CFA exams. They're going to rechange the syllabus. It's going to be the biggest change of all to be more, yeah, which is like, they're trying to make it more practical, real life applicable rather than, you know, being very academic driven, which is good. Yeah. So what will be the rule of thumbs or things that, you know, you used to practice that you felt that, hey, right now with this investing experience, this you should give a little less weightage and this a little bit more weightage kind of thing?
I guess she's kind of going back to what, you know, what I mentioned before about my experience in Ukraine, where, and even now, if I get too hung up on, you know, you want to be a value investor, but just because something looks really cheap doesn't mean it has value. And that's, so if I miss one leg of that trifecta, people, structure, and value, that's where I screw up.
I see.
So it's really, I want to make sure I get that. And also be confident. Don't, especially when you're younger. I didn't invest, you know, I missed Indonesia in 1998. And then, but looking back on it, it's, you know, that would have been best. I know somebody who's held, you know, Unilever and multi-Bintang ever since then. He's done really well.
Yeah.
So he's kind of the smartest guy in the room.
Yeah.
But I did not do that. So
yeah,
I guess if there's any advice, maybe learn from your mistakes.
Great. If you were to wind back time and probably do one thing different, will you take that option, and what would it be? What would be that thing that was different?
Well, I guess get a partner who supports you. You know, I mean, I love what I do. I love, you know, the whole group structure that I've been doing, and I love doing. My ex-partner, well, ex-wife, she never really valued it. She thought it was a stupid thing to do. So, and if you're not in the business, I guess I could understand that. She thought it was just a way for me to meet rich people, social network. Where for me, it was a key part of my analysis. So yeah, if you get a partner that really supports and supports you and loves you for what you do and mostly understands what you do, accepts it.
Yeah, I think that was so unconventional, but such insightful advice, because I'm struggling in the same place like you right now, Michael, as well. So yeah, but I'm very blessed that she's supportive to me as an entrepreneur. So, you know, I guess like what you said, hit me like a ton of rocks, because it's so true. You know, I wouldn't have left the comfort of an corporate career without her support, and it's so true what you just said. Because if you don't have your better half, other half supporting you, it's a very lonely journey, I would say.
Yeah, for your family and anybody you're spending a lot of time with, it's really good to have that support network. Yeah.
Michael, it's been such an insightful, 1.5 hours. I think time just flew by. I wish I could go on, and who knows? They could be around too. After your worldly trips, another crisis, another crisis, and definitely we leave some of the books mentioned, some of the show notes, especially the multi-baggers that Michael mentioned in Indonesia, and yeah, looking forward to chatting with you again, Michael, and thank you again so much for coming.
Oh, thanks for having me. Really appreciate it, and I enjoy the talk.